Here in this video, we're going to be going over what I expect for AMC stock this week. This is going to be an AMC stock price prediction, and this one is a little bit different. Now, I'm expecting a certain something that I want to go over with you here in this video, but the end of this week is an interesting one. So we'll get into that more here throughout this video. It's just going to be a strange week. So hit the like button, subscribe to the channel, and source your comments, questions, or concerns down below in the comment section. Let's go ahead and get straight into it. So AMC stock last week, Red Dead Redemption. It has been bad ever since AMC announced they were going to dilute shareholders. Now, I think that situation is all but over with. I don't think we're going to grapple with that all too much longer. I think that has fully been priced into AMC stock. You're trading near the lows for AMC, multi-year lows. All of your indicators are just flashing oversold levels, right? AMC stock is at $7.42. Your low for 2023, your multi-year low, $7.05. If you look at this low compared to when literally everyone thought AMC was going bankrupt, that was at $10.35. So like you're even way under that, like $3 under that. So I mean, you've priced in this bad. Like there's no questioning that. A lot of bad has been priced in. A lot of dilution has been priced in. If you look at things like the RSI, that is at 33.78, and your MACD is negative as well, but not all too negative. It's not a terrible sign. But still, nonetheless, not exactly a positive sign as well. Now, let's look at the option activity for this week. Let's blow it up on the bubble chart. Let's take a look. So your call has a lot of activity at the $8 strike. Open interest of about 9,300. The volume of about 8,000. If you look at the 750 call, you have open interest of about 3,000 and volume of about 8,000. Your call at the 850 call has volume on Friday of 3,300, open interest of about 4,900. So some decent call activity overall. Your put to call ratio is like 2-to-1 calls for this week. If you take a look here for the Stock O tracker data, for this week, you do have 2,000 calls currently in the money, 45,000 calls out the money. There is a lot of dry powder here, right? If AMC stock does start to move higher, then it's very possible you could see, quite the gamma squeeze start to form, especially considering a lot of the option activity is at the $8 call, $8.50 call, $9 call. It wouldn't surprise me to see a lot of shares have to get bought by the market makers if AMC stock does bounce. I think it's probably logical and likely that we do see a bounce at this point, just considering how oversold the stock is. Now, if you're taking a look at the puts, in the money puts at 18,000, out the money puts at 11,500. Same thing here. Lots of puts in the money means, I mean, you could probably see a lot of puts go back out of the money of that 18,000 that were in the money if AMC stock does rally, especially if you break above 8. There's a lot of open interest around that $8 put. We'll take a look at that here in just a moment, but that could fuel a lot of buying pressure as well. Now, let's go ahead and take a look at the option chain itself for AMC stock and break this down a little bit further. So, expiring this week, on the call side, about 3,000 for open interest at the 750 call, about 9,000 for open interest at the $8 call, 850 call about 5,000 for open interest, and the $9 call about 3,900 for open interest. This could be a significant amount of buying pressure. You're talking millions of shares that would have to be bought here, considering AMC's float is a lot smaller than what it used to be. That is a significant amount. Now, at the $7 let's see, at the 750 put, you do have about 4,900 for open interest and 6,000 for open interest at the $8 put. You have 3,000 for open interest at the 850 put and 1,000 for open interest at the $9 put. So a couple million shares that could also need to be bought by the market makers if AMC stock does just make its way to like $8, $8.50, even $9 per share. So we'll talk about that here in just a second. Now, as far as your major catalyst for this week, one of which is going to be earnings. We talked about this in the last video, but Nvidia will report earnings Tuesday and after hours, and then you're going to get a lot of retailers as well. Now, some of your retailers include a Kohl's, a Lowe's, a Best Buy, Abercrombie & Fitch, Burlington, Dick's Sporting Goods, American Eagle, as well as to a lesser extent, even John Deere, you could say, Wednesday pre-market. So this will really just tell us how the consumer is doing, especially Best Buy electronics, Lowe's, kind of home goods, right? Fixer-upper kind of projects like real estate, more or less. And then Burlington, Dick's, obviously different sectors there. American Eagle, more of that premium outfitter brand. Abercrombie & Fitch as well. So it will be somewhat important as far as gauging the consumer. That's what I'm getting out of this week. But NVIDIA earnings themselves, I'm actually expecting really good earnings, really good guidance. Again, I don't think anything's going to be different there than what we've got in the last 2 quarters, but I think it's probably priced into NVIDIA stock. It's probably not going to give you the craziest rally when you get good earnings, good guidance. You might actually see NVIDIA stock fall like you've seen last earnings, or maybe it just confirms that AI is here to stay and NVIDIA numbers are just going to get better and better and better. We'll have to ultimately see, but it looks like kind of that reverse of, you know, the situation's just getting worse and worse. Markets start to say, hey, this is the worst it's going to get. Even on bad earnings, a bad stock can do well. Same thing to the contrary. You don't see it all too often when a company is just doing so well that it's much better than all expectations. So many times in a row, people start to say, hey, is this the best it's going to get? It's not too often that actually does happen, but you could be setting yourself up for that in this upcoming week. Now, a quick look at the AI investor sentiment. You do see bulls at 43.8%. 28.1% of investors neutral, and 28.1% of investors are bearish. Your historical average is 37.5% investors being bullish, 31.5% being neutral, and 31% being bearish. So the bears are definitely on a little bit of a retreat as of right now. The level of neutral investors is quite lower today than the historical average, and the amount of bulls out there is definitely higher than the historical average. Your 1-year high for bulls was on July 19th, 2023, and that was at 51.4%. When I think about this logically, the only reason why stocks were really doing well in July and over the summertime was NVIDIA, this hype around AI. I think the recent kind of hype and data we've gotten recently is a lot more important than AI, at least here in the very short term. AI is obviously going to be a big wave over decades, right? So I don't want to minimalize that at all. But in the near term, it's all about the 10-year treasury yield. It's all about when the Fed's going to start cutting rates. It's all about the economic data, and everything's been Goldilocks so far. So I do think just in terms of that, you probably could see more of a rally from here, in my personal opinion. Now, 10-year treasury yield's currently sitting at 4.493%. So you are definitely a lot lower from your highs, which your highs were about 5%. Today, you've seen the equivalent of like 2 rate cuts from the Fed. So that is definitely more encouraging rather than not. And I do think this great capital, allocation shift, or great economic shift, as I've called it a couple times now, is going to take a while, right? The stocks you want to be in for 2024 are not your Magnificent Seven. They are the stocks that are going to benefit from rates going lower. Now, I don't know how fast that capital is going to move around. We know there's $6 trillion in money market funds, right? But we know some of that capital is going to make its way into AMC. We know some of that capital is going to make it into small cap stocks. Just for reference here, the entire Russell 2000 has a market cap of $2.23 trillion. Just the money sitting in money market funds alone is $5.9 trillion, almost 3 times the amount of the total market cap of the Russell 2000. So that is a very big deal. And that is not something that should be understated at all. Just a fraction of this money heading out of money market funds, heading into stocks like a Russell 2000 could be very, very good news for your broader markets. Now, as of recently, we have seen the first outflows from treasuries that we have seen since February of 2023. Now, look at this period of time from 2019 through 2021. Stocks did very well, and you had a lot of outflows from treasury funds in that time. Those outflows made their way into stocks. Now you've seen a lot of inflows into treasury funds ever since like the midpoint of 2021 until now. And this is the first time in a long time you've actually seen the first outflow from treasury funds in a long time. And I mean, it's pretty substantial, at least a pretty substantial start. We'll see where this ultimately does take us. It could just be a blip. Rates could be going higher. We'll ultimately have to wait and see. But if this does continue and you do start to see a bigger pullback and money flowing out of treasury funds, that could be very good news for your broader investor. Now, as far as AMC stock and what I'm expecting this week, why this week is going to be weird is because you have some economic data. Again, bad economic data is one thing, all right? Just a slowdown out there is one thing. But really bad economic data showing a recession, that's another thing. Wednesday, you're going to get durable goods orders. That's your big catalyst for this week. You're expecting negative 3.2%. If you come in, like I think, at around 2.5% or 2% negative, that's going to be just bad enough. If you come in at like negative 5% for durable goods orders, markets are going to say, hey, are we heading into a recession? And that's a much different fish to fry. That would be bad for stocks. Now, Wednesday is Wednesday. And then on Thursday, markets are closed because of the, holiday, right? Thanksgiving. And then Friday, bond markets will be closed, but stocks will be open. So treasuries will not be trading. I think futures are open until noon. So you'll have some kind of impact there. But a lot of the activity we've seen lately has been from treasuries, right? Treasuries going up or down on any given day has really been, what has fueled stocks to the upside or to the downside. So that's why this week's going to be a little bit weird, especially that bond market being closed on Friday to wrap up the end of this week. Now, if you do take a look at AMC on the charts, I think it's clear we probably see a bounce from here. I think you could make your way into the $8 range, as high as $9 per share. $8.85 per share is where your 50-day moving average is. I think you find a lot of resistance there. So I think you can get as high as about $9 per share this week. That would be my expectation on a bounce. Unfortunately, if you fall under 7, if it's a really bad week for stocks, you fall under 7, you could go to $5 per share pretty easily, in my personal opinion. And that would not be great. So let me know what you guys think down below in the comment section. What is your personal opinion? That is going to do it for this video. Thank you for watching. Enjoy the rest of your day, and I will see you in the next one.